Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 14th of the 5th, 2021. Time is just coming up to 0435 GMT. Asian session well advanced, European session firing up, our lunchtime North American session. Right, yesterday then, Thursday the 13th, we had a positive opposed driver in the yen at plus 59, front and back door flows mainly coming out of the pound at minus 41, out the dollar at minus 25, and the euro was the positive rock at plus 7, activity plus or minus 66. Intra-week then, this is the most relevant because it's from Monday the 10th to the 5th to about 15 minutes ago. We've got a negative opposed driver in the yen at minus 311. Front and back door flows mainly going into the pound at plus 293, into the dollar at plus 155, and the euro was the negative rock at minus 137, activity plus or minus 448. So over the week then we've had yen weakness driving, and the pound has been sucking up the bulk of it, the dollar next, and the euro's been slightly soft. Right, intraday then, Asian session to about 15 minutes ago. Positive unopposed driver in the dollar, plus 34, no backdoor flows, the opposing negative flows mainly coming out the pound, minus 14, out the euro, minus 12, and the yen is the negative rock at minus 8, activity plus or minus 34. What's going to knock it about today? Well, Friday, basically there's two main data points. You've got US retail sales and Michigan consumer sentiment. Right, so US retail sales, I mean, realistically, they're likely to come in strong because of all the furlough arrangements and the checks that the US has been sending out. What are people going to do? They're going to spend the cash. So realistically, we're expecting a strong showing in US retail sales. Now, the backdrop of this is it was the previous strong CPI. So we'll talk about that in a bit. Right. So let's look at the flows. Our trades are about 2,000. What are they? 2,730-ish points profit at the moment. They've come back from a peak of about 3,500. So we'll take it from there anyway. Right. So what have we got? We've got euro strength at the moment, except against the dollar and the Swiss. We've got yen weakness across the board, pound weakness, except against the yen and the NZD. The Swiss is strong across the board. The CAD is strong, except against the Swiss, the dollar and the euro. The AUD is weak, except against the pound and the yen. The New Zealand dollar is weak, except against the AUD and the yen. And the dollar is strong, except against the Swiss. So what have we got? We've got yen weakness across the board and Swiss strength. So take your pick in the middle. Right, so let's just get rid of that and have a look at the asset classes. We'll start with the US dollar index as usual. Right, US dollar index. Basically, we've got this sort of broke, it came back, it's now at about 0.35 from the floor, so it's weak but it's come up a bit. Gold, double top, then you had this situation and it's now back at this break support, and it's 0.5 from the model floor or top, so it's half marks. Oil's dirging around on the soft side, so it's 0.4 from the high. So the geopolitical risk hasn't really kicked in on that, or the pipeline hassle they had. Wall Street broke, and it's come back, and it's now 0.25 from the high. S&P double top broke, similar look to it, 0.22 from the high, and the tech took its time in breaking, and then hasn't really been having a good time. It's 0.5 from the model floor or top. Right, so US 10-year and the bond. On the bonds, US 10-year, it's been dirging around. Generally, it's slightly, price is slightly on the up, and it's 0.4 from the model floor. And the bund has broken this floor, and so we've got the situation where European yields are significantly outgunning American yields in the 10-year and the bund at the moment. So this is likely to have a beneficial effect on the euro dollar, and the ECB has been trying to talk it down, right, which is of interest. Right, so what have we got? We've got copper. Right, copper, 1, 2, 3, 4, 5. Came back to the second pump, went to base camp, messed about, broke. Where are we? It's come back, but it's still a high higher than this break. So it's about there. US steel. We've got this sold off at the double top. It broke. It then came back down. It's broken that, and it's now operating below the initial break resistance there. So US steel is struggling a bit still. Right, let's get rid of this and do the final analysis then. So the market really is going to be focusing on this idea of the US retail sales, the effect that it's going to have, the knock-on effect in terms of inflation. So we've got, we're short USD dollar against euro, pound AUD, and we're short NZD against the euro, the pound, the CAD, and the AUD. Right, so you've got this this dollar situation. You've had a pump on the CPI, which freaked everybody out in terms of inflation, and will the Fed start to take notice of this? They're saying it's transitory, and so they're ignoring it, which is what they basically said. They're going to run the economy hot, but now you're getting all these pundits saying that the dollar's going to be bid, but and then you've got retail sales, which are likely to be on the up due to all these furlough checks and employment checks. So you're likely to see retail sales, and realistically this doesn't change our macro view in the slightest. The dollar's being deliberately degraded in terms of purchasing power to pay for this printing and the overall economic policy of the Biden administration, which is to spend, degrade the value of the currency, which will degrade the value of the debt, and they'll be able to, in monetary terms, raise wages, but in purchasing power terms, everybody's worse off. of this policy will inflate assets, monetary assets like equities and commodities, and we're starting to see that. Oil's lagging. We do think oil, well, we're going to get interested in oil shortly from a long side anyway. So we're sticking as we are. Expect some volatility. Hope that was useful. Good luck with your trading. See you next time. Thank you.